The Elliott Wave Street volume profile plus Elliott Wave blocks part 3. We are live. It's 7:01 p.m. EST, and today we are going to build up the connection between the Elliott Wave blocks and the Elliott Wave theory. So let's start. Here we have the Elliott Wave complete cycle, and one of the key things we are going to work with today is understanding the relation of the Elliott wave block technique and each of the Elliott wave structures. There are going to be some different cases where we are going to use one Elliott wave block or the other, depending on the wave that we are and depending on the area that the price is going to reject. So we are going to start here with the basics, and then we are going to check some examples on charts with more advanced applications. So here we have the complete market cycle, and this could be one wave of application. We can add the Elliott wave at the corrective, at the end of the corrective 2. We can also add another one at the end of the corrective 4, and we can add another one at the beginning of the impulse. So we are going to have 3 Elliott wave blocks. When the price starts building the second wave, wave 2, we are going to look for the rejection on one of these Elliott wave blocks. So let's suppose that the market rejects at the Elliott wave block area of the previous wave 4. So right there, we will see the green candle rejecting the area, and at the close, we can buy. So right here will be the entry to go long. That's the signal. The stop loss will be a couple of points under the low. So that will be the protective stop loss right here. And the target, we can look for the Elliott wave block of B as an initial target, then the Elliott wave block where the wave 1 finished. So we have those targets. Let's suppose that the price starts moving up. Let's say that crosses this Elliott wave block, perfect, hits the other one, and at this area, we have rejection. Let's suppose that at this area, we have a candle closing under the Elliott wave block of the top of wave 1. So if we are live, we have to be extra careful, because there could be different things going on. But if we went long here and we are seeing this rejection and the candle closes under this Elliott wave block, we have to be extra careful. So we can book some additional profits and leave a smaller position, or probably we can take out the whole position. If we are in a bigger time frame on an hourly chart or in a 4-hour chart, we can try to hold it for longer. But if we are in a 1-minute chart, of course, we can't hold it. Maybe that scalp, it's over. On a different scenario, let's imagine that the price breaks up everything. Sometimes we're going to have that behavior. So fantastic, we were able to capture wave 3. Now, what if the price keeps falling here? If we don't have a rejection and the price keeps selling off? So when that's happening, we need to focus on the next Elliott wave block that's going to be at the end of the second wave. And right there, we repeat the process. So we wait for the price to move inside. It doesn't matter if it crosses. Let's work with that example now that we are talking about advanced applications. And the next candle closes above the Elliott wave block. So the price can move inside, can cross, can move lower, and then can reject, or it can just hit and reject. It doesn't matter. Here will be the entry. In this example, that will be the entry. Here will be the stop, and we repeat the process where the B wave finished. We have one target. Here we have another target, and we start seeing how the price reacts at those levels. But let's suppose that nope, that the price keeps selling off. So the next Elliott wave block will be down here, and that will be the last point of reversal. So if the price comes down to this area and we have the rejection, that will be our entry. That's it. So we can draw different Elliott wave blocks with these guidelines using the end of 2, the end of 4, and the beginning of the impulse. And in the one that the price rejects, that's where we can trigger the trade. That's where we can look into the buy trade, the stop loss, and following the move. Of course, sometimes the price can trigger and can take us out. Right? See that here. So we look for the next one. We're going to see some examples today. Now, there is another approach of adding the Elliott wave blocks. On the previous slide, we were adding them at the end of the corrective 2, at the end of the 4, and at the beginning of the move. So on the lower side of the trend. If we draw here a midline in the price, on the previous slide, we were drawing the Elliott wave blocks under the trend line. on the lows, on the corrective legs, at the end of the corrective legs. So another approach that we can use is, and we're going to see examples in a chart, is drawing the Elliott wave blocks at the end of each impulse. So this is going to be especially good for the next corrective leg, for example. And also, for example, in this case, it will be helping us finding the end of A. And if we have the price, let's say, coming down here, and we have also the Elliott wave block for the wave 4, let's say that we have that one, and we have this one, and let's suppose that the price moves a little bit lower than the blue Elliott wave block and moves to this area, we can use this level as a trigger as well. If the price rejects the Elliott wave block of the top of the impulse, of any impulse, that would be a trigger as well. So let's start working here with examples. This is a euro-dollar 1 hour chart. We can apply the Elliott wave blocks on any instrument, on any time frame. So let's start with the price. Let's start from here. Let's go cycle by cycle. So when we are there, let's suppose that we start our trading session and we are seeing this leg up. And we want to find the end of the second wave. So we draw the Elliott wave block right here at the beginning of the impulse. So that will be this Elliott wave block. We will be looking for a rejection, so we can see clearly how the candle rejects. Once the candle rejects and closes, that's the entry point. So in this particular case, the entry will be here at the close of that green candle. The protective stop loss is under the low of the candle, so this is the risk. And we will be looking for a leg up. So then the wave 3 comes up, it accelerates, great, builds the wave 4, and then continues for the wave 5. So we can see that the trend direction is upward. So this will be a following the trend trade. Let's suppose that we want to use this Elliott wave block of the internal wave 4. We can buy here first entry and second entry here. Right? So of course we can apply on any corrective the theory. All right, the price continues, accelerates, then rejects, and let's suppose that we are finding the end of B. Of course, I'm here highlighting all the possibilities. When we are in real life, we might decide to take it or not take it, depending on how we like the setup at the moment, but my job here is highlighting all the trades. So right here, we can build the Elliott wave block here. The price moves up, it's inside the Elliott wave block, moves away from the Elliott wave block, rejects precisely to the Elliott wave block area, and continues higher. Right? So we can use the Elliott wave blocks in tiny cycles and in the bigger cycles as well. Right? So as you can see here, the price, well, reaches the high, moves down. Let's suppose that there we're thinking, okay, that could be our wave 1. We can draw here the Elliott wave block, right? That always is taking the last candle, in this case is the green candle, with the high, and the next candle to the right with the low, and that creates the range of the Elliott wave block. So look at this beautiful one. The price then rejects and moves back into the Elliott wave block area, but as we can see here, we got a rejection, right? And having that rejection tells that it's a sell trade. And right there, at the rejection, at the candle close, we sell it. We leave a protective stop loss above the high. And we start drawing the Elliott wave blocks on the left. So as a general rule, we look for corrective waves. And when we have those corrective waves, we can look to the left to find targets. So for example, here we can see how the price was sideways. So right there, we can build an Elliott wave block using the corrective leg. So we have the last low, we have the second candle high, and that's the Elliott wave block. So if we are selling there, that's going to be our first target. If the price rejects this Elliott wave block, it's going to be a buy trade, if we like it, and it's going to be a full profit taking of the short. On the other hand, if the price is able to cross down, like we are seeing here, the Elliott wave block, we look to the next one, and the next one is this one here. So we look for the next Elliott wave block. You see, so we are if the price breaks down an Elliott wave block, we look for the next one, right? So we are not going to trade it. In this case, here is the next one, and look the difference here and with the one before. Here we have rejection. So if we are short, we need to do something here. Either book partial profits, probably take out everything out, because at this Elliott wave block, the price is having trouble, right? So then the price moves up and we have a leg up. We're just watching the price, and we know that every time that the price builds a leg, we can draw an Elliott wave block. Right? So right here, we can draw the Elliott wave block from this low, the candle low. Remember, the last low, the last candle low is going to be our first reference point. Then we extend the box till the second candle on the right. If the candle is huge, we only use the first one. But if the candle is near the high of the other one and is like logic to have it there, we can use the two candles. Right? So that creates the Elliott wave block area. The price moves inside the Elliott wave block right here. The next candle is green. So that's a buy trade right there. Right there, that's a signal. We can trigger if we like it, and we can leave a protective stop loss under the low. Here we're purely trading with Elliott wave blocks. In real life, probably I wouldn't buy this one because the momentum here, I would be thinking that the price will need a lower low or something like that because it was too fast. But the exercise that we are doing is showing the Elliott wave blocks. Of course, in the membership, in the daily videos, we are putting everything together. But in this lesson, I want to show you the setups. And then the price moves up, so we start looking to the left. And here we have another Elliott wave block. So remember, the last one, right, with the last high, so the last red candle right there, with the next one right here, and we extend. So we know that right there could happen something. And look, here we have rejection. So that rejection will be, hey, book your profits. And if you are looking for a sell trade, that's your signal. That one will be your sell trade with the red candle. Right? That's a sell signal. So if for some reason you believe that the price is going to take out this low, whatever, you are going to sell it right there. You are going to leave a protective stop loss just above the high. That's going to be the risk. It's going to be the 1%, right? And the price moves up and takes out the Elliott wave block and continues. Right? So clearly that Elliott wave block didn't work as expected, let's say, didn't give us the signal, whatever. The price, when this happens, when the Elliott wave block, when the price breaks up the Elliott wave block, we look to the left. The next Elliott wave block is this one that we have here. So we know that that's going to be our next level of watching the price, of seeing what's going to happen. Okay, so we know that now that the price could move back to the previous Elliott wave block. Right? So we have another reactionary move, another impulse, whatever, another leg, however we're counting there. We can draw here the Elliott wave block. In this retrace, the price moves down, rejects. So this is a bull entry. This is a buy trade right there with a protective stop loss some points under the low. Let's suppose that this candle take us out. It didn't, because it didn't reach the low. But let's suppose, well, if that happened, on that candle, we need to buy again as another entry. In this case, the price didn't make the low, but let's suppose. But sometimes it's going to happen. And the price moves up to the Elliott wave block. And look, we don't have breakup of the Elliott wave block. The price moves sideways, breaks down here. So we are looking for a sell. That first red candle is an entry point, or the second red candle that closes. Protective stop loss above the high. So this tail didn't take out the trade. And the price starts moving down. So we start looking to the left, to this Elliott wave block area. We extend and we check. If the price breaks down, we can hold it. And we continue looking to the left. So the next sideways area will be right here. Right. And that one got rejected. So at this candle, this is it. Right? That's it. We need to close the trade. So that's the process. Let's have a look at another example here. This is the S&P. On the S&P, we are going to do something special because we are going to get to the live market. So I'm going to show you some examples, and then we're going to get to the live market, and we're going to continue developing the story in the daily videos on the daily videos in the membership. So look, let's start here from the left. So we have a move up. So clearly that's an Elliott wave block, right? So don't forget that the definition of the Elliott wave block is just the last part of any cycle. That's it. So the last two candles, the last candle and the first candle of the cycle. When we have, like in this case, the last candle and the next one is huge, we only use the first one. Because if not, if we use both, like in this case that the second candle is huge, the Elliott wave block would haven't any sense. It's huge. So it's a problem. So of course, will be this one here. All right, look, the price moves down in a 3-wave sequence. We can start adding something else. Okay, so we have ABC. The price comes to the Elliott wave block, rejects. If we leave a tight stop loss there, it takes us out on this candle, so we have to trigger again. Let's work with the worst scenarios. Right? And we look to the left. So this area is going to be interesting. Right here. Okay, the price can cross up, didn't reject, breaks up. The next level is going to be here. Okay, we have a rejection. That could be a sell trade. If we are looking for a sell, this one didn't work as a sell. Good to book profits from the previous one and breaks up. Okay, good. Then the price moves down strongly, so we have this area that we can build the Elliott wave block. In this particular case, the candle high, this one here, the last candle high of the sequence is the one that I'm using for the Elliott wave block, because using the next one, look at this size of the candle it doesn't have any sense. So always when we see that the price makes a leg, we can draw the Elliott wave block. The next step is waiting for the price to test that area. So here, ABC, the price rejects and moves down. At the same time, is building another Elliott wave block. Right? So this Elliott wave block, I'm drawing it with this candle and this candle, the two candles. The price moves down. We can have another Elliott wave block here. It got rejected. Oh, so we have to be careful. It's only one leg, but we have to be careful. Booking profits. The price moves down to build an ABC or whatever, and moves back to this previous Elliott wave block. Right? And right there, the price rejects. Right there, we got the green candle rejecting. So we can start seeing our favorites. We can start defining our favorites. Always is better to have these big areas. Could be on a 5-minute chart, but it's different dealing with this Elliott wave block here than, let's compare. Let's start seeing the difference. Look at this Elliott wave block and look at this Elliott wave block. So we can start seeing that those are better, those are more attractive to be traded. So the price moves inside, rejects. It's a buy trade. This one is easy and clear. Price moves fast to the previous Elliott wave block area that was taken here. Rejects. So it's either a full profit taking or maybe some little short here. The price moves into this Elliott wave block area again. Right? And there we have, wait, let me draw that one. This one is important, traders. Yeah, this one is important. I remember why I drew it in a different color when I was preparing the class. Look, this Elliott wave block in red, I'm taking the high, and I'm taking the next candle low. So I'm using this Elliott wave block on the high, similar to this one. Right here. The price moves inside, rejects, entry point, doesn't work. The price moves in and rejects, another entry point. We look to the left and we start looking for these Elliott wave blocks. If the price crosses up, fantastic. It doesn't reject, and the price continues. And then, on the next slide, we will do the S&P, the continuation on the S&P in a second. Let me show you this example before. So this is the DAX. Same thing, we have a leg. That's the first step of what we need here. We need a leg. Great. When we have a leg, we draw the Elliott wave block. Here, we take the last low candle and the first candle to the right. You may argue that this area is huge. And in that case, if you were looking for just the one candle here, in this particular case, the price didn't reach that area. But it rejected here. So could be, could be. We can say, okay, I want to pay the risk because I like it. Because I'm seeing the rejection here. Right? Other trader will say, nope, I'm gonna wait for this Elliott wave block down here with just one candle because the second candle is huge. So I'm gonna wait for that one to be rejected. And that's fine as well, right? So that's the DAX example. And here we are going to now make an ES or S&P example, and we are going to get to the live market. All right. So this is a 5-minute chart. The Elliott wave blocks can be applied on any time frame. So look, this first Elliott wave block that I'm drawing here is being taken from this last retrace, and is the last candle of the retrace, and the next candle. So this is candle 1 and this is candle 2. It's a long tail candle, right? So that's why the Elliott wave block comes up here. Great. So we wait. The price moves down. The price moves up. So look, here we can draw another Elliott wave block. And right there is the entry point at this rejection. This one is tiny. We have a bigger one on the left, but when we are live, we need to trade what we see. Entry point there, stop loss here. The price probably reaches the 1-to-1 or whatever. It doesn't work as expected. The price moves down into this area, and we know that this one is likely to work better because it's bigger. And the price rejects, so that's the entry point. We look to the left, and we have here the next Elliott wave block. The price rejects here to book profits or to short the market. Works for profit taking, doesn't work for the short, is a loss. Price continues higher, and eventually rejects. And I want to highlight this example. Sometimes, traders, we are going to have the breakup of the Elliott wave block, so the price can move above the Elliott wave block, and then rejects, and here is the entry point. So it continues working. The Elliott wave block is not going to disappear, or is not going to be different when the price crosses up the Elliott wave block. It still works. It still works. All right. So that will be the entry point right here. The price moves down, rejects this previous Elliott wave block, moves a little bit higher, probably 1-to-1 or something. The price continues and rejects again. Right. So entry number 1, entry number 2. Now, after that, we have after the second entry, we have a pretty decent leg up, so we can build another Elliott wave block here. The price moves down. Wait, oh, no, sorry, on the previous slide, here is where we were. This one, we already covered this one here. Yeah, we were here, so a second rejection. Look, so we have here a rejection. If we are in the trade, we leave here the stop, so never got us out. If we didn't trigger here for some reason, we can trigger here at the second rejection. So entry 1, entry 2. The price moves up. And today, this morning, I was looking for this one. Before the news, I didn't trade it. But it went precisely to that previous Elliott wave block again with that tail. The 5-minute candle before the news. This is just an educational example. Never I'm going to trade the news. That's crazy, just an example. But the price precisely there moves inside or hits the Elliott wave block and rejects. So that will be the entry point, and woo, the price moves up to this Elliott wave block. Now, then during the session, the price went up to this Elliott wave block that we have from before. Right there, rejects. So this is extremely objective. You know, if for some reason we were long, here, whatever, and we have this rejection, we know that that's it. I don't think that this is a sell trade, you know, especially after the news and after all this demand and this huge candle. You know, difficult if we are live and we look to the left and we see all that demand and going against that thing. I don't think it's a good idea, but probably a good idea to book profits if we were long. So the price moves down. Of course, here we have an Elliott wave block, first and second candles. In this particular case, the price never moved back into the Elliott wave block. So we can do anything. We can't do anything. The price makes the rejection. Right? The price makes another leg down, and there we can draw our Elliott wave block right here. And this one is perfect. The price, before that, look, the price moves back again into these Elliott wave block areas and rejects. Right? It rejects. If we extend this Elliott wave block that we have here from before, there we go, it rejects. Precisely there, price moves up to this new Elliott wave block, rejects. So this will be the buy trade or setup, and this will be the sell setup. The price moves back here to the Elliott wave block, so profit taking, or probably a buy trade if someone is just trading all of them. And the price crosses down the Elliott wave block, and that's where roughly we are, because I take this picture a couple of minutes before the class. Right now the ES is at the 113, so just 3 points below, so it's in the area. So let's move here to the live market. This is a 15-minute chart. So the multiple time frame analysis is important because we can build the top-down approach. We can go to the hourly chart, draw the Elliott wave blocks there, move to lower time frames, make them better, but have a market structure. In a second, we are going to connect. We're going to tie everything together with the Elliott wave theory. But look where we are. So the plan here is that if we look to the left, this Elliott wave block, the price did the breakdown. So the next Elliott wave block that we need to watch is this one here. Last and first candle. Right? And we can draw another one here, you know, the low from the low. And we can have another one here that at the end is quite the same. There we go. Right? That's a key area. And here we can start working with scenarios. So the plan is that if this is the auction, and if this is the 50% line right here, this is cheap, this is expensive. Now adding the profile or the auction process logic. So we are cheap, we only can buy at these areas. So the plan is that the price moves inside this Elliott wave block. If it rejects, that's our entry point, entry number 1, and the protective stop loss will be under the low. Let's work with a different scenario. The price moves down here, crosses down this area, moves under the low, let's say, and rejects, and that's our buy trade. Entry 2. When that happens, if that scenario happens, we can draw an Elliott wave block here at the low, and we can go to the 5-minute chart, look for the price to reject that one, and we can buy here, let's say. That's another way to do it. The one that we like more. We plan it, and we only look for the ones that we like. And then we look to the left, and we start building profits, right? So, of course, this is going to be a profit area. The next profit area will be here. And the next one would be here. Right there, the price will be expensive. We can make the big Elliott wave block or a little bit smaller, 1 or 2 candles. But that's going to be the area that we are going to look at. Now, let me show you the wave count, and let's integrate with this wave count. So this is an updated wave count. I was looking today for a 5-wave sequence. Well, first of all, this week, we were looking for price to take out this high. So that worked, but in a 3-wave sequence. So the wave 4 is extended now, right? So we have the price taking out this liquidity, rejecting, and all the exercise that we just did with the Elliott wave blocks. And that Elliott wave block that we were drawing on the 15-minute chart, one was here at this area. This will be the hourly chart Elliott wave block, and this low here as well. Right? That's, of course, on the 15-minute chart we can draw in with a little bit more of precision, but it's the same plan. So now we know that the price needs to either reject before making the low, and that will be a buy trade, or breaking the low and rejecting from there, and that will be the buy trade. But look that this is fantastic, because before, without having this tool, we couldn't trade it, we couldn't trigger the trade in case that fails to make the low. We were always looking for the price to make the low. Always. We will always be here looking for the price to make the low and reject from there and buy there. But sometimes we miss trades when the price failed to make the low. With the Elliott wave blocks technique, that's not going to happen anymore, because we know that if it rejects, it's our signal to go long. And we can give it a try. We can give it a chance. And we can buy from there in this narrative. Of course, if we have, let's say, a huge breakdown here on the S&P, we are not going to buy it, because clearly didn't show accumulation during the Elliott wave block. Right? So that's a key and important aspect of this narrative. Let me bring here my trading view so we can see the updated price action. So this is the live chart. And let's go to the hourly chart so you can see what we are working on here. Right? So we are looking these areas. So we know that if the price rejects here, that's a buy trade. If the price crosses down the Elliott wave block, breaks down and moves into this next Elliott wave block on the 15-minute chart and rejects here, we can buy there. And if the price, instead of doing all this rejection, moves under the low and rejects here, that will be the entry point. Before, we only have this last one. Now, with this technique, we have this one and we have this one as well. So 2 more entries, 2 more ways of finding the end of the wave with a clear and objective way of triggering, because we wait for the candle to close. That's it. Right? So it's extremely simple, the technique. Let's have a look at some examples on some stocks. All right, this is Tesla, hourly chart. So there are places where the price changes direction, where it doesn't have any sense. So for example, this wave 1 right here. Probably you trading, you will say, oh, this high here is the target. Or if you want to sell this thing, you will be looking for price to take out this high and reject. As you can see, there are cases where the price reverses in an area that looks pretty random. But if we add the Elliott wave block here, by taking the last candle that make the high with the next candle to the right, we have these 2 candles, candle 1, candle 2. There, we can build the Elliott wave block from that high to the low of the second candle, and we extend to the right. So at this rejection, don't forget that the gap is just a big red candle. With that rejection, we know that cycle is done. That we have a big probability that the market now is not going to take out this high because it rejected the Elliott wave block before. That's it. We start looking to the left. When that happens, where is the next Elliott wave block? Well, here. The price is moving down, crosses the Elliott wave block, never rejected. Here, there is no way of buying here, right? There is no signal. The buy will be if a candle closes above the Elliott wave block. It never happened. Right? So we look to the left and we find the next Elliott wave block. That will be here. In this case, we can use 1 candle because 2 candles would be like the entire cycle. So only 1 candle. We extend. And ta-da! We got here the rejection. That's a buy trade. Okay. Now we are in the live market. So we can draw here the Elliott wave block on this area. And if the price rejects the Elliott wave block here, let's say tomorrow, it's a buy signal. This will be now the live market. Right? This is the live market. I just take the picture of a few minutes before the class. So it's right there tomorrow when the market opens, if the market closes above this area. It's a buy trade. If not, if the price continues here, well, we need to wait here to this area to see. That will be the last point of rejection. If it comes here and reject, we buy there. If it continues selling, we don't do anything. Simple, right? This is pretty simple. It's a great example. Let's have a look at another one. This is Meta, old Facebook. I still say Facebook, you know. So weird, the name. I don't like it. Anyway, so look at this great example. We have a leg up. So always when you have a leg, you have an Elliott wave block. So you draw the Elliott wave block, last candle and first candle on the right. The price moves in that direction and doesn't take out or hits the Elliott wave block in this case. If you add the other technique of taking the top of wave 1, in this case, you got the rejection. So this technique of using the top of the impulse, you can use it when you are finding the end of a corrective wave as well. Right? It's useful. Or if you were waiting for the lower Elliott wave block, you didn't trigger this trade. Okay, the price moves up and we have another corrective leg. So this area was your Elliott wave block, the previous retrace. Always the previous retrace is the first area that you are going to look for. Rejection, that's the buy trade. Perfect. Price continues. You look to the left. When you are here, finding the end of this 4, you look to the left. And you look the last Elliott wave block. So it will be here. Also, you can draw it here. Right? Here or here. Both, if you like. Rejection or rejection. That's the entry point. Fantastic. The price makes another high. You are here on the corrective. You draw here the Elliott wave block. You have rejection. That's a buy trade. And now we have the completion of the wave count. So now we have to be careful. We need to start thinking on the other way, on the other side. So the price moves down, and this is a live trade. We have a leg down. And now we are finding the end of 2. So we look to the left, and we can build here our Elliott wave block. Entry 1, entry 2. Of course, we can start adding to the narrative. Oh, I'm going to wait for an ABC. I'm not going to trade after A. I'm going to trade after C. Right? So we can start adding, of course, more rules. This is just the framework. Right? And we can sell there. This is a short trade. And you will be saying, okay, but where are the profits? Well, first area to watch is here, pretty close. The next area will be here. If we want to start drawing all of them. Here, here, oops. Here, I'm drawing the tiny ones. Here, this one makes more sense. Here, and the next area will be here. Right? So of course, let's suppose that the trade works, and the price starts breaking down, and breaks down, and we have here rejection, so we have to be careful. That will be just wave A, let's say. The price continues and moves here, and then rejects, and we can buy it from there. Right? So we can start building strategies around the Elliott wave blocks, and that's going to be the 4th class next week that we are going to talk about this type of strategies. But in terms of Elliott wave, the beauty of Elliott wave blocks is that we can use the end of any wave on the left to have an area where the price can reject. And if it rejects, it's a profit taking or a new trade. That's it. It's extremely, extremely objective, this technique, traders. And we are going to continue working in the membership, in the live markets, highlighting these areas because they are key. All right, traders. So I think that's it for today. I'm going to post the recording in the website shortly so you can watch it several times. I believe this class is extremely, extremely important. Next class is going to be, let me show you, April the 19th, next week at the same time. And we are going to go through strategies and trade management using the Elliott wave blocks. So please have a fantastic rest of your night. And I'll see you tomorrow on the daily video with fresh wave counts and fresh trading plans. Take care. Bye-bye.